ready to decode the world of investing. We're diving into Andres Garza's guide today, and trust me, he makes it surprisingly simple.
He really does cut through all the jargon, doesn't he? And the best part is, he starts right at the beginning by helping you figure out what kind of investor you are.
Which is so important. I feel like a lot of people skip that step. It's
Yeah.
like, hold on a second. Before you even think about stocks or bonds, you need to know your own risk tolerance, right?
Absolutely. I couldn't agree more. There's no one-size-fits-all approach to investing. Your age, your financial goals, even your personality, those all play a huge role in determining your investing style. Like a 22-year-old who just got their first real paycheck, they're in a totally different place than someone who's getting ready to retire.
Right. It's a
Yeah.
totally different ball game. So how does Garza break it down? How many different investor types are we talking about?
He lays out three main profiles: conservative, moderate, and risky. Conservative investors, they're all about playing it safe, protecting their money above all else. They're not necessarily chasing those massive quick returns. They'd rather go with slow and steady growth through things like, say, government bonds.
Okay, so tell me more about these conservative investors. What makes them tick? What are their priorities when it comes to investing?
Well, like I said, they value security. They want to know their money is safe and sound. They're okay with slower growth as long as it's consistent. They'd rather sleep well at night than stress about the ups and downs of the market.
I can see that. Peace of mind over those potential quick wins. And then in the middle, we've got the moderates. What sets them apart?
They're willing to take on a little more risk if it means potentially higher returns. They might dabble in real estate or maybe explore index funds, but they're still keeping a close eye on those safer options too, like the conservative investors.
So they're dipping their toes into different waters, but not quite ready to go full cannonball into the deep end.
Exactly. They're testing the waters, diversifying a bit, but still prioritizing a certain level of security. Now, on the other end of the spectrum, we've got the risky investors.
These are the ones who are all about high growth opportunities, the ones who are comfortable with the idea that they could lose big in pursuit of those massive gains.
You got it. They're diving headfirst into things like startups, cryptocurrency, individual stocks, things that have the potential for enormous returns, but also come with significant risk.
High risk, high reward. That's their motto. So with these three profiles laid out, Garza really stresses the importance of figuring out where you fit in before doing anything else, right?
Absolutely. In fact, he actually encourages his readers to pause, put the book down, and really reflect on their investor profile before moving on. He wants you to be honest with yourself about what you're comfortable with, what aligns with your financial goals, and what you're ultimately hoping to achieve through investing.
I love that. It's like he's saying, know thyself before you invest thyself. It's a foundation for everything else.
Exactly. It's all about building that solid foundation. So I'm curious, thinking about these profiles, where do you see yourself fitting in? What kind of investor do you think you are?
So let's say you've done that soul searching. You've cracked the code on your investor profile. Now what? Where does Garza take us next?
Well, he's a big believer in baby steps. He doesn't want you rushing into anything crazy right off the bat, especially if you're leaning towards that more conservative profile. He actually spends a good chunk of the guide talking about what he calls renta fissa.
Renta fia. Okay, now you're just using fancy words to make me feel lost again. What is that in plain English?
It just means fixed income. Basically, think of it like you're loaning money out, and in return, you're getting those regular interest payments, plus you get your principal back when the term of the loan is up.
So it's a bit like being the bank, right? You're lending out money and earning interest on it.
Exactly. And Garza argues that one of the most accessible and underutilized renta fissa tools out there, especially in Mexico, are CTs, which are basically government bonds.
Government bonds. Those are generally considered pretty safe, right? It's like, I'm assuming the government is good for it. They're not going to just disappear overnight.
Right, exactly. I mean, there's always some level of risk, but yeah, they're generally considered a very low-risk investment. And that's one of the big selling points of seats. What I find fascinating, though, is that Garza doesn't just talk about these things in theory. He gets super practical. Like, he actually walks you through the process of buying seats. He even mentions this platform called Seats Directo, which is specifically designed for people looking to buy these types of bonds.
That's awesome. It's one thing to say invest in government bonds, but it's a whole other thing to actually show people how to do it. I love that he's so hands-on with his advice. And in terms of actually getting started, what's the barrier to entry like? Do you need to be like a millionaire to even think about buying seat?
Not at all. And that's the beauty of it. Garza actually points out that you can get started with as little as 100 pesos.
100 pesos, that's what, like $5?
Yeah, something like that. Super accessible. And to make it relevant to a wider audience, he even draws a parallel with U.S. Treasury bills, or T-bills, as they're often called. Same concept, different name. You're essentially lending money to the government for a fixed return.
So whether you're in Mexico City or New York City, there are options out there for dipping your toes into the investing waters without breaking the bank. But I'm guessing Garza doesn't just stop at government bonds, right? There's got to be more to the rent-a-ficia world.
You're right, there is. He goes on to talk about private fixed income investments. So with these, you're still in the realm of fixed income, but you're lending money to companies instead of the government. He gives the example of SOFIPOs in Mexico, which I'll admit I wasn't super familiar with before reading Garza's take.
Sofipos. I'm drawing a blank. What are those?
Yeah, so they're not quite banks in the traditional sense, but they operate in a similar way, and they often offer slightly better interest rates to attract investors.
Okay, so you're taking on a little bit more risk. I mean, I'm assuming a company is a little bit riskier than lending to the government. But with that added risk comes the potential for higher rewards.
Exactly. And that's a key takeaway here. Higher potential returns usually come with at least a little bit more risk.
Makes sense. It's all about finding that balance.
Yeah.
But I have a feeling Garza doesn't just stick to rent-a-fia forever,
Yeah.
right?
You're reading his mind. Eventually, he takes us into the world of what he calls renta variable, and that translates to variable income. This is where things get a little more, shall we say, exciting. We're talking about the stock market, and yes, even cryptocurrency makes an appearance.
Oh, now we're talking. The stock market. That's where everyone wants to be these days, right? So how does Garza break it down? Where do we even begin to understand this whole other universe of investing?
He starts with the basics, like what actually is the stock market? How does it work? And then he gets into this concept of buying acciones.
Acciones. Is that just the Spanish word for stocks?
It is. It's as simple as that. But he breaks it down in a way that's easy to understand. He explains that when you buy a stock, you're essentially buying a tiny piece of ownership in that company.
Okay, so let's say I buy a share of Apple stock. That means I own a tiny, tiny, tiny piece of Apple, the company. But how do I actually make money from that?
Good question. So Garza explains that there are a couple of ways. The first is through something called capital gains. Basically, let's say you buy a share of Apple stock at $100, and then for whatever reason, the price of that stock goes up to $150. If you sell it at that point, you've just made a $50 profit. That's your capital gain.
Okay, buy low, sell high. I've heard that one before. But that's not the only way to potentially profit from stocks, is it?
Yeah.
Right? There's buy low, sell high for those capital gains. But that's not the only way, right? Didn't you say there was another way to make money from stocks?
You're right, there is. It's through something called dividendos, which is just the Spanish word for dividends.
Dividends, okay. Remind me how those work again.
So basically, some companies, they'll pay out a portion of their profits to their shareholders, and that payout is called a dividend. It's like a little bonus just for owning the stock.
Ah, okay, I see. It's like the company is sharing its success with its investors. So I buy a stock, I might see its price go up or down, but then I also might get these little dividend payments periodically too.
Exactly. It's a nice bonus for sure. But, Garza does make it clear that while the stock market can be super lucrative, trying to figure out which individual stocks to buy, when to buy them, when to sell them, it can get overwhelming, especially for someone who's just starting out.
Totally. It's like, where do you even begin? There's so much information out there.
Yeah.
PE ratios, market cap, all that jargon.
It's a lot. And this is where Garza introduces this concept that I think is brilliant for both beginners and seasoned investors, exchange-traded funds, ETFs for short.
Okay, so break that down for me. ETFs, what are they and why are they so great?
Basically, picture an ETF as a pre-packaged investment portfolio. You buy one ETF, and it automatically invests in a whole bunch of different companies. You're instantly diversified.
Oh, interesting. So instead of me trying to research a bunch of companies and pick out individual stocks, I could buy an ETF that holds, say, stocks from the top 500 companies in the U.S.
You got it. Or, there are ETFs for almost everything. You could focus on specific sectors like renewable energy, maybe emerging markets if you want to get international. You name it, there's probably an ETF for it.
Wow. So instead of spending hours researching every single company,
Yeah.
I can get that diversification just by buying a single ETF. That's way less intimidating.
Right, and diversification is key. That's something Garza emphasizes throughout the guide. Don't put all your eggs in one basket. Spread your money around different companies, different industries, maybe even different countries.
Okay, that makes a lot of sense. And Are ETFs generally considered less risky than just buying individual stocks?
They can be, yeah,
Yeah.
especially for beginners. Because with an ETF, you're basically relying on the expertise of the fund managers who put these baskets of assets together. They do a lot of the research, the analysis, all that. It takes some of the pressure off of you. Take an ETF like SPY, for example. If you buy SPY, you instantly own a tiny piece of every one of the 500 companies in the S&P 500 index.
Oh, wow. That's pretty cool. It's like having a whole team of experts working for you then.
Ooh!
Okay, so we've covered a lot of ground. We talked about those fixed income investments like government bonds. We talked about private fixed income investments through companies like Sofupos. Then we jumped into the stock market, covered actions, capital gains, dividends, and then dove into these things called ETFs. But we can't forget about the one that everyone's talking about these days, cryptocurrency.
Yeah, crypto. It's definitely the wild card of the investment world, wouldn't you say?
For sure. So how does Garza approach this whole crypto craze?
Well, he doesn't shy away from it. He acknowledges that there's a lot of excitement around it, but he's also quick to point out that cryptocurrency is highly speculative. It comes with a lot of risk. This is definitely not your grandma's rent-a-fija.
So not exactly fixed income then, huh?
Not even close. With crypto, the potential rewards are massive, but the potential losses are too. And Garza, he actually does a really good job explaining what cryptocurrency even is. Like it's digital currency, uses cryptography for security, all that. But here's the key thing he focuses on, this idea of intrinsic value.
Okay, so say that again, but pretend I'm five. Intrinsic value.
Basically, imagine a traditional company, right? They're
Yeah.
generating profits, they have tangible assets, maybe a long track record of success. Cryptocurrency, on the other hand, its value is largely determined by its technology, by how widely it's adopted, and honestly, a lot of it just comes down to market sentiment.
So it's less about concrete value and more about perception and future potential.
You got it. It's like if everyone believes a certain cryptocurrency is going to be the next big thing, its price can skyrocket, even if it doesn't have a ton of real-world uses yet.
It really is like the Wild West of investing then. Exciting, but unpredictable.
Yeah.
So what's Garza's main piece of advice when it comes to crypto? Should we all go all in?
He says to do your homework. Don't just jump on the bandwagon because everyone else is. Research the project, research the team behind it, look for real-world applications. Don't invest anything you're not prepared to lose, that's for sure.
Solid advice across the board.
Mm-hmm.
So, wow, we've covered so much ground today. We talked about starting with those baby steps, those fixed income investments like C-EATs. We explored the world of the stock market, these actions. We dove into ETFs, and we even touched on the wild world of cryptocurrency. If you had to sum up everything Garza talks about in his guide, what would you say his main investment philosophy is?
I think at its core, Garza's philosophy is about empowering people. He wants to give people the tools and the knowledge they need to take control of their own financial futures. But he also emphasizes that it's not one size fits all. You have to figure out what works for you, what aligns with your risk tolerance, what's going to get you to where you want to be financially.
And he does such a good job of making investing feel less intimidating, less confusing. He breaks down complex concepts into bite-sized pieces that anyone can understand. Plus, he shares his own experiences, even the mistakes he's made along the way.
I love that about his approach. It makes him relatable. He's not claiming to have all the answers, but he's figured out what works for him, and he wants to help others do the same.
It's been awesome taking this deep dive with you today. Garza's guide is definitely one that I'm going to be recommending to, well, pretty much anyone who will listen. And if this conversation has sparked your curiosity, definitely check out the resources he links to. There's so much to learn.
Definitely. Like you said, investing is a journey. There's always more to learn, more to explore. So keep that curiosity alive.
Couldn't have said it better myself. Thanks for joining me on this deep dive into the world of investing with Andres Garza. Until next time, happy investing, everyone.